Silver is on the highs. Gold is near the highs. This moving average turns up and you're going to attract more buying. If this moving average turns up and unemployment comes in high, more people are getting laid off, these markets are going to rocket. They're just going to, they're going to rocket. And gold will actually silver will do better, obviously. But gold will actually do better than you think because the rate cuts might not take effect for a while.
Gold and silver prices surged in early U.S. trading Wednesday, buoyed by Federal Reserve Chairman Jerome Powell's dovish remarks and a busy U.S. data day. The precious metals market is gaining momentum, with silver reaching new highs and gold approaching peak levels. VinceLanci, a renowned analyst in the precious metals and commodities markets, highlights the market's sensitivity to the 50-day moving average. He suggests that an upward turn in this indicator could trigger increased buying activity, potentially pushing higher prices. Gold has broken through the critical $2,340 resistance level, which may now support a potential retest. The next resistance level looms at $2,365, and a move above this could bolster bullish sentiment, paving the way for new all-time highs. The gold-silver ratio has reached a significant resistance area between 80.30 and 80.55, reacting as expected by falling after retesting this zone. This follows a substantial breakdown below a multi-year bullish trend line in early May. The ratio's behavior at this resistance suggests that silver might outperform gold soon. Lanci predicts that high unemployment figures could further increase gold and silver prices. While he expects silver to outperform, he also notes that gold may surprise to the upside. However, he urges caution regarding rate cut speculation, as the timing remains uncertain despite market anticipation. This cautious stance is echoed in the recently released minutes from the Federal Reserve's June meeting. Officials indicated that while inflation is moving in the right direction, it needs to decrease more quickly to warrant lowering interest rates. The Fed maintains its 2% annual inflation target, which it has exceeded since early 2021. Policymakers needed more evidence of sustained improvement before considering rate cuts. Join us as we delve into VinceLanci's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Today is the Fed minutes at 2 p.m. Tomorrow we're off. Happy Independence Day. And Friday is non-farm payrolls, employment rates, depending on how you look at it. So we'll be back on Friday. We'll be off tomorrow. Let's take another look. Yeah, so here we go. Silver is on the highs. Gold is near the highs. This moving average turns up and you're going to attract more buying. If this moving average turns up and unemployment comes in high, more people are getting laid off, these markets are going to rocket. They're just going to, they're going to rocket. And gold will actually silver will do better, obviously. But gold will actually do better than you think because the rate cuts might not take effect for a while. Anyway, the rate cut's going to come, right? The question is, have you wasted a lot of money speculating on that, or are you just going to wait for it to actually come? Let's start with the charts, okay? So there are levels, right? Michael Oliver's levels are a little bit above this market, call it in here. In gold and silver, we're through the silver level, I think. Well, just to go through our levels, right? The buyer is here, and he may still be here. The mini buyer was here. Now I moved this line. This line was here, identifying where the buying was. The buyer is no longer there, so I focused on the selling, keeping it down as opposed to the buying, keeping it up. So it's kind of like a dead area in here, right? We're above both of those areas now. Not only are we above those areas again, but we're above those areas and the 50-day moving average is underneath us. Now, what's different? Well, here we are going down through the 50-day moving average and it's flat. Here we are going up through the 50-day moving average and it's flat. When a market goes through a 50-day moving average or any moving average in general, you will get activity, obviously, right? But you will get more definitive activity when there's a slope. So if the 50-day moving average turns upward as it looks like it's about to do in gold, it hasn't happened yet, you'll get probably even more buying coming into gold. So that upswing is like the final sign for a macro discretionary person to add to a position.
Silver prices have settled around the $30.40 level following yesterday's robust rally, as investors await fresh momentum to propel the precious metal towards its next target of $31. This consolidation comes amidst a broadly bullish sentiment in the precious metals market. VinceLanci has been closely monitoring silver's performance. He notes that silver displays a more pronounced upward trend than gold, with the 50-day moving average beginning to slope upward. This technical indicator suggests increasing buying interest and could be a harbinger of further gains. The market remains bullish for silver, with the EMA 50 providing support and aligning with analyst VinceLanci's positive outlook. However, dropping below $30.06 could halt the uptrend and trigger a pullback. Let's get back to the interview.
In silver, it'll be more obvious to you. In silver, we never really sloped downward, and now we've re-engaged an upwardly slope. And you can see that silver's overperforming. That's the extra buying coming into silver. Silver's levels were, I didn't have the confidence in my levels as I did in gold, but I did know that this was significant, and it acted that way for some period of time. This happened to be the area that the silver buyer would come in on the back of the gold buyer. We had the similar sell-offs, but now we're above. So everybody, silver and gold are on the same page, okay? So are they on the same page higher or lower? Well, obviously higher right now. So we want to look at this as the pre-breakout, the warning before the Michael Oliver levels that we discussed yesterday. So I would say that this market, I did say yesterday, looking back at gold, I did say above here, we should go to there. And we're not there yet, but I think we're going to go there. And I'm guessing that Michael Oliver's levels are in this area more so. I don't have them in front of me right now. Anyway, so why is this significant? Why am I giving it so much attention? Well, it's because it's what I trade a lot. And second, we're going into a holiday. So people who have a decision to make it before holidays if they have to. And that is, I'm a buyer. Do I want to buy it before or after the holiday? Do I want to buy it before or after the number? And this is money coming into the market saying, I want to buy it before the holiday. I want to buy it before the number. Is that always mean we're going to rally after the number? No, it doesn't. But it means that the intrinsic interest in this market is not in protecting against losses. It's in adding to profits. And this market's a different market than it used to be. There you have it. Here, I'll let you look at silver again for a little bit of silver porn. Yeah, so there you have it. So let's U.S. market's going to open, and you're probably going to get some initial buying that'll be matched up with the selling from the guys front running from last night. If the market is unchanged on the rest of the day in gold and silver, that's good. If the market's higher, that's obviously very good, but it also would probably smack of being overbought going into the number on Friday. If the market's lower today, then that means too many banks and traders front ran the interest. There is buying coming in the U.S. The question is it enough to handle the people that are long and want to sell? Who knows? Complicated behavioral stuff that I look at there.
With silver displaying a more pronounced upward trend and technical indicators, like the 50-day moving average signaling increasing buying interest, do you anticipate that silver will continue outperforming gold soon? Or, given the Federal Reserve's cautious stance on interest rate cuts and the broader economic conditions, would gold surprise us with a more robust performance? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.